sometimes we may want to know how the overall stock market is performing at any particular point in time. And rather than having to scroll through every single stock that's listed on the market, we can use this wonderful tool that's available to us known as a stock index. Now, a simple way to think about a stock index is that it gives us the average price of a group or a basket of stocks over time. So there are three major stock market indices that are the most commonly used. The first one is the S&P 500, and this is the Standard & Poor's compiled list of 500 of the biggest stocks listed in the US market. This index is the most commonly used index. Sometimes you might hear someone say, oh, the market is up, the market is down. There's a good chance that whoever is saying this is looking at the performance of the S&P 500 index. What are the 500 companies that are listed on the S&P 500 index? You can check it out at this website. I've included all the links in the description below. The second most commonly used index is the Nasdaq Composite Index. This index shows us the weighted average of all the shares, all the stocks that's listed on the Nasdaq exchange. As of the time that this video is made, there are 3,376 stocks listed on the Nasdaq that make up the Nasdaq Composite Index. One thing to note about the Nasdaq index is that it's quite weighted towards technology stocks because there's just more technology stocks that are listed on the Nasdaq exchange. Because technology stocks can be a bit more on the growth speculative side, therefore what happens is that the Nasdaq index can sometimes be more sensitive than the S&P 500. And that means that from time to time, the movement of the Nasdaq index can lead the movement of the S&P 500. For example, we can look at recent movements in the market over the past few months. We see that the Nasdaq crossed into bear market territory a few months before the S&P 500 did. The third index is the Dow Jones Industrial Average. This index is made up of 30 large companies that are listed in the US market, and they tend to be very well-established companies that have strong financials and good market share in their respective domains. Now, if you're looking for ideas for good, strong companies to invest in, the Dow Jones Industrial Average, it might be a good place for you to start looking. Alright, so these are the three most commonly used stock market indices that can give us an overall sense of how the market is performing. In addition to these three, there are also indices that we can use for specific sectors and specific industries. Now, these look at smaller sections of the market, and they will show us the average for comparable companies within those industries, so we get a sense of how that particular sector is doing as a whole. As individual investors, what use are these indices to us? Well, there are two possible ways. First of all, the indices helps us to consider when we might want to get invested. For example, if I look at the stock market index and I see that a new downtrend might potentially be forming, then it might not be the best time for me to buy big amounts of shares. Now, how else can we use the index? Now, let's say I want to have exposure to the US markets, but I don't want to invest in individual stocks. So I can do this by looking for products that will track particular stock market indices. So these can be, for example, funds or companies that hold a portfolio of shares, such as the performance of their portfolio will mimic or imitate the performance of the S&P 500. So this may sound a bit confusing right now, but not to worry. As we go along, we're going to be covering topics like this. We're going to be looking at exchange traded funds, ETFs. We're going to be looking at mutual funds, index funds. These are products that we can perhaps consider if we want to earn the return of the overall market. Alright, so that's it for today's video, a brief introduction to stock market indices. Like, comment, subscribe if you found it to be helpful, and I will see you in the next one.